Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. Happy Friday the 13th, everybody. A little under the weather today myself. Hope you all are feeling better. As you see on your screen right now, as we do each and every week, we show you the stocks that will be featured in this recording. And if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, let's take a look at the markets real quick. You can see that we have moved down. Still in this ascending pennant pattern, which could work out to be an ending diagonal. We have to wait for that to relabel to a 5 at some point. But last week when we were talking, we said that we're in this upper trend line here. And if that ascending pennant pattern was going to hold, we should pull back a little bit. That's exactly what happened this week. So we've just moved back down right into the middle of the triangle. If we look at the moving averages, you can see even on the close today, we did close right on top of the 10-day moving average. So nothing to worry about yet. No crazy things going on Friday the 13th in the market. But we did have some economic news to talk about this week. Starting off on Wednesday, we had the CPI report that came out, and it was right in line with expectations. The market liked it, and you can see we rallied to the upside on Wednesday. Nothing to be concerned about from an inflation standpoint. But then on Thursday, the PPI report came out, and it was actually a little hotter than expected. And that's a problem for two reasons. One, we don't want to see prices going up on the wholesale level because in general terms, the wholesalers try to pass those on to us. They haven't been able to do that yet, as evidenced by the CPI was still in line. But it also compresses margins, and we'll see that likely in the next earnings cycle. So if the wholesalers are paying more, but they can't pass the prices on, that goes right to the bottom line, right to margins. Market didn't like that. So if we go back and look at the chart, you can see that we moved down on Thursday on the release of that PPI report. And then we continued that move to the downside today. So bounce up on Wednesday, moving back down on Thursday and Friday. There we are. So to the upside there on Wednesday, and then down on Thursday with the release of the PPI report, and then we followed through today. But again, showing you the 10-day moving average, nothing really to be concerned about yet, and we're still on pace for this melt up into the end of the year. We'll see how that plays out. Take a look at the VIX real quick. Nothing too exciting to talk about with the VIX. We talked about this 12.5 level, and I drew that upper line there at 15. I think it's highly likely that the VIX just stays in this channel, especially if we have this slow melt up scenario into the end of the year, probably bouncing down around 12.5 again. Now, what would be interesting is if we did break above 15. We broke above 15, then maybe something else is going on. And you know what's coming next week. All eyes are going to be on the Federal Reserve meeting. It's still a toss-up, in my opinion, even though the market seems to be pretty convinced that we're going to get the 25 basis point rate cut. But I think it's a toss-up, and could the Fed surprise the market and not cut? That could send us lower and maybe send the VIX to the upside. If we go back to the chart of the S&P, that could actually move us down to the bottom trend line of this ascending pennant pattern if there is a disappointment out of that Fed meeting. But we'll see how that plays out. Now let's take a look at the Dow. And if we look over here, continuing to move to the downside on the Dow. Not an ascending pennant pattern, just a plain old everyday channel pattern to the upside. And we're kind of moving down towards the lower trend line. A little surprising that the Dow is acting this bad, I think, underperforming the S&P for sure. We can see that the 10-day moving average has not crossed below the 30-day yet, so no bearish cross there. But we are below the 10-day moving average on the DIA. Remember, we traded and closed right on the 10-day moving average on the S&P, so nothing too concerning there. Now, if we take a look at the Qs, and gosh, we've been talking about the Qs a lot during Trade Finder each and every week. And by the way, before I forget, if you haven't signed up for Trade Finder, you can do it using the link that you see on your screen. We do every Tuesday at 1 p.m. Eastern Time, live during market hours. We look at the markets. We look for trade ideas, and we have a live Q&A at the end. And these past couple of weeks, we had two really good ones with the movement up in Amazon. If you saw that one, that was a nice move to the upside. And most of you have been commenting on the recording that you like that. So we've had two big winners in the past couple of weeks. So check it out. And hopefully you'll join us for this coming week in the Trade Finder. Love to have you. Great community, good talking back and forth. So looking at the Qs, I've been saying that I was really surprised to see the Qs continue up with rates moving to the downside. And I'll show you a chart of rates here in just a moment. But bucking the trend here a little bit, the Qs actually did okay today. The best performing of the markets that we're looking at. Just with rates ticking to the upside, really surprised that we are moving higher on the Qs. But we have a pretty nice doji there, not too far from the 10-day moving average, so I wouldn't really call this overbought. But with that doji, who knows what happens on Monday. Could be interesting at the beginning of the week as we look towards that big Fed meeting that's coming up. If we look at the IWM, now this one does make a lot of sense. Moving to the downside, most people, myself included, think that the small caps are tied to rates. And with rates starting to tick back to the upside, you would expect the IWM to come down, and it has. What we need to watch is the B level here on this upward zigzag. You can see is right at the 61.8% fib level, the strongest of all fib levels in my opinion. And we're starting to approach that. The algorithm has labeled this a waveform. By the way, if you haven't gone and gotten a copy of this software, go to hub.com. You get free Elliott Wave, get free intraday Elliott Wave. There's a subscription on there for AI signals if you want those, but the Elliott Wave's free. And it's got it green, which means the algorithm is not quite sure that wave 4 is done yet. But it needs to hold right where this B level is, or the zigzag becomes disqualified. And we could be looking at the IWM moving all the way back down here towards 210. We had already tested the breakout of the triangle, so it already did that rule. As you know, when you break out of triangles, you come back down and test them. That's what normally happens. And then the movement back down here, we just have to see if we can hold. We're right at the 50-day moving average. Maybe that's what the IWM needed. But the level you want to watch is right here where this B is, which coincided with the top part of this ascending triangle that we had on the IWM. So getting a little bit tense there on the IWM. Now, if we take a look at interest rates, I'm going to show you TLT, and you can see prices moving to the downside. Remember, TLT shows you prices. So it's been moving lower. That means yields and rates are moving to the upside. We're getting a little bit overdone here to the downside, getting a little bit away from that 10-day moving average. But with the Fed expected to cut in December, is the bond market saying, no, we're not so sure they're actually going to go with a 25 basis point rate cut? What else could be causing the interest rates to go down other than maybe the 25 basis points for December is already baked in the cake, and then the Fed says they pause? That could cause the rates to tick up a little bit. If they don't give us any indication of when next year, they may go back into cutting. And you guys have been asking about it, so thought I would show you the TNX here real quick as well. The TNX showing yields. Remember, TNX shows yields. TLT on the 20-year shows prices, so you'd expect them to be opposite. And following suit, the 10-year showing rates moving up. So moving to the upside on rates, and we'll just have to see how far that goes. The market seems to be just, a little bit unsure of this inflation and rates. Those are two things that they're not in bad shape yet, but just enough that it's creating a little bit of concern, slowing down the market rally that we've had so far. Let's look at the cryptos real quick. Bitcoin back above 100,000 at the time we're doing this recording. So trading back above there. So we've been above 100,000, and I know it trades 24/7, but they do give an end-of-day print when the calendar rolls over on the trading. And we had two closes previously above 100,000, but no follow-through day. You know that rule by now. You have to have a second day follow-through or confirmation day because the market loves to give head fakes. That works in the crypto world as well. But we're back above it now. Can we hold that? Can we have a follow-through day? If so, then Bitcoin could be off to the races. Ethereum, just hanging in there pretty darn well, I think. It played a little bit of catch-up to Bitcoin and a little bit of a pullback, held the A-wave high on this zigzag, which it needed to do, and looks like it's poised to move up. We already got to the 100% extension. Now we have to wait and see, can we break that and head higher, which would be the 161.8% extension on Ethereum. We've been adding in a couple of the other coins here. I wanted to update you on those that we showed last week. Cardano, also holding in there pretty well, very similar to the chart of Ethereum. We had a little bit of a pullback, back up above this 110 level, as you can see right now. That's a good area for Cardano to hold if it's going to try and go back to the upside. And then XRP, this is just going right back to what I say all the time: no security in any time frame, gets too far away from the 10-day moving average. That works in cryptos too. you go vertically like this, nothing goes vertically up forever. We're going to come back down towards that 10-day moving average, and that's what we did. And so we're consolidating here. We actually have a little bit of a triangle here on XRP. They had some favorable regulatory news that came out, and perhaps we can break to the upside. But I think if you're a fan of this, you need to keep an eye on it. Remember, you don't pick, even though it's in a wave 3 currently, you don't pick a direction on anything that's in a triangle. And speaking of triangles, let's take a look at the chart of USO, a big triangle. And while I'm thinking about that, this is exactly what we do in the volatility portfolio at ewotrader.com. And we're running out of the year here, so we have one more opportunity than this, but we're giving away each and every month this year one of our level 3 subscriptions. That includes our time strategy, which is a sideways-based strategy. We look for stocks that stay in a trading range and put on income-based strategies. Then we have the volatility strategy, which is these big triangles here. And we just look for a breakout. This is a perfect example of what you'd see in the volatility portfolio. You don't have to pick a direction on those. And then the AI-based impulse strategy, which we look for those zigzags within a wave 3. That's the primary strategy in there. It's a directional strategy, and using zigzags that are only 3 waves, not the traditional Elliott Wave 5 waves, so they tend to be shorter term in duration. So all you have to do to register is leave a comment underneath this video. You leave a comment and you're registered for the drawing. So I hope you will. Good luck, everyone. Please hit subscribe as well while you're there. We are trying to push this thing up towards 50,000. Love to have your support there. Tell a friend, whatever. And if you find this information interesting or helpful, maybe you want to share that. We'd love to have you help us out there. All right. So coming back to the chart on USO, you can see that triangle looking for the potential breakout. Now let's go take a look at natural gas. We'll look at UNG real quick. Just when you thought maybe something was starting to happen here, back down again today on natural gas. Little bit above the 10-day moving average, not too significantly so, but what you have to wonder is we had this triangle, we broke to the downside out of it, and you know the rule here as well, when you have a breakout of a triangle, especially a symmetrical one, but they all count, you go back and test the point of the breakout. It works the same way as gaps. We don't know if it's going to happen immediately or take some time, but you're going to go back and test that breakout point at some point. Maybe that's all was going on with this move to the upside. There has been an awful lot of cold weather up north, but there's a lot of supply in the natural gas world. So you need to see it get back up. And I just think that we need to see natural gas back above 16 before you can get too excited about going long. It just doesn't seem like it wants to. And right now it's just kind of staying in this big trading range here in the 13 to 16 area, with just popping out just a little bit above 15. So natural gas, one of these days, is going to give us a good trade, but so far it just keeps us waiting and wanting more. Now, looking at the metals, these are moving exactly as you would think. Interest rates moving up and right back down. Same thing here. We had this little small triangle in GLD, broke out, came back, tested the point of the breakout, holding the 50-day moving average. I've been saying for weeks now that I feel like the metals are just going to stay in a trading range until we see what policies President-elect Trump is actually going to enact. Is he going to put the tariffs on as much as he says, or is that leverage? Is that jawboning just to get what he wants out of these countries? And we aren't going to see those big tariffs. If we do, there's been some economists on talking about 1 percentage point moves a tenth on the inflation indicators. And so there is a possibility of importing inflation with tariffs. But if they're not significant, then it really wouldn't matter too much. But if he does what he's been threatening to do, then that could change things. So I think when we're looking at the metals here, they're just in a wait and see mode. Let's see what actually happens. They didn't like that little touch of inflation that came in on the PPI report either. So that kind of helped to reverse course on the GLD. You can see it was up on Wednesday and then back down Thursday and Friday, just like the markets were. Same thing going on with SLV. If we take a look there, movement to the upside. This is one that we have to watch as well, because we're right back down to this wave 4 also at the 61.8% level. So another one to keep an eye on. If we break that, everything changes in the metals. Maybe they don't stay in the trading range, but if we hold this level, then we have the opportunity to go back to the upside, but we'll be keeping a close eye. So if you're interested in silver, you're right there. This is where your stop is. If you're long silver, I wouldn't get out yet, but if you're looking for an entry, you got to get back above these moving averages, and more ideally back above this area here around 29.5, I think would be more ideal to go long silver. I think they're just wait and see. Let's see if we stay in these trading ranges. If I'm right on that, as they're waiting, and we don't have to wait too much longer, we'll be into January here before too much longer. So I hope everybody enjoys a great weekend. Thanks for watching as always. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.